All right. So, question is, can markets rally between now into the end of the year and into 2026? We're gonna get some major clues in just a bit, in about half an hour from now, in what is gonna be a big week for markets. I'm talking it's gonna impact crypto, stocks, gold, oil. The works, right? Forex currencies. So, plenty to look out for, and that's why you are tuning in to this live stream by Bybit Learn to hopefully glean some insights that you can act upon. Hello, hello, and welcome to this daily market update live stream. My name is Han Tan. I'm the chief market analyst at Bybit. Apologies for the croaky voice here. Looks like the weather is a turn in the weather is getting to me as well. But hey, today I couldn't miss it because this is a big, big one. We've got the US jobs report coming in just a bit, in about half an hour from now. And I'm going to show you how markets are going to react, not just live, but also give you some historical context to this very important economic event. Okay, so I'll get right to it. I'm going to go ahead and show you the live Bitcoin chart here. This is the daily time frame for Bitcoin. I know this is something that you all love and watch very closely. In the meantime, I'm going to get confirmation that we are indeed streaming live on YouTube. So if you are watching this on X or somewhere else, our YouTube channel is Bybit Learn Official. Okay, look for Bybit Learn Official, and then you click on the live tab, and that's where you can see all of the live streams that we have done, keeping you up to date on the markets. Okay, that's for YouTube, and on X, we are indeed streaming now live on Bybit underscore learn. Again, our X handle is at Bybit underscore learn, and you can see a lot of our content there, including the preview article I just published this morning, giving you a heads up on what's to come with this US jobs report. So lots to check out there. So indeed, we are live on YouTube, and I'm trying to get confirmation on X here to make sure that we are indeed live. Just bear with me, folks, while you're checking out this live chart for Bitcoin. Again, this is the daily time frame. Yes, we are. Yes, we are live on X as well. Now, folks, I really hope you are not watching this after the live stream is ended, right? Because again, we are going to show you live as and when the US jobs report breaks. We're going to see some live reactions. And of course, I'm going to give you a heads up on some potential scenarios as to how markets might interpret and react to this very important data. Okay, so let me start with a quick check-in. Yeah, so Bitcoin trying to rebound there of that 85,000 level or so, not quite hitting our downside target of 84,000 just yet, but of course it's so close, right? It all depends on how that US jobs report comes out in just a bit. That's a quick check-in on Bitcoin. Looking at the S&P 500, also seeing some rebound there, some buy the dip action. You've got this widely followed technical indicator called the 21-day simple moving average, right? SMA. You see this as a support level. In other words, prices hit it like a floor and then bounce up. That's what we've been seeing so far today. Again, all these are on the daily time frame. That means each of these candlesticks or each of these bars represents how that asset's prices performed in one single day. You can change that time frame down to 1 minute or up to 1 month, and lots of variations in between. Okay, and you have that option both on the Bybit website trading platform, or also if you're trading on the Bybit app. Make sure you have the your account set up. Okay, and I'll show you some goodies that you can get by signing up for your new Bybit account in just a bit. That's a quick check out on gold right now. The S&P 500 right now finding support at the 21-day simple moving average. Looking at gold prices here, once it actually comes up. So again, hitting that target that we've had since December 9th from last. So December 9th, that's when we set that 4348 target right here, and it duly hit it on excuse me, on Friday, December 12th, right? And then that was pretty much as good as it got, right? At least for the immediate term. So this 4348 target that we had set, not just on December 5th, but also on December 9th during our special live stream, we had that outlined, hit it, and then coming back down slightly. Again, if this jobs report, depending on how it pans out, we could see another big move. Wouldn't be surprised if it either hits or even surpasses it, right? But the point is, the target that we had set from a week ago, it was accomplished on Friday, December 12th. Okay, cool. Maybe, yeah, let's get to some of the meaty stuff now. We'll definitely be checking in on these charts in just a bit. Okay, if you are new to watching the markets and you may have heard about the jobs report or non-farm payrolls, and you're wondering, well, what's with all the fuss, right? Why is it so important? Well, let me give you a quick 101 here. Let's go ahead and look at this slide. So, um, keep in mind, this is the same slide, well, pretty much similar, that I've had since the last non-farm payrolls report. Right, I presented this prior, right? So let's just go over it again real quick. So why does it matter? So first things first, right? Just know this: the U.S. is the world's biggest economy. Okay, and what is the main engine that keeps the economy growing? That is US consumers. Okay, that means people, buying and selling stuff. Well, more like buying and using up stuff, right? Be it goods or even services. So now, why does the US jobs report matter? Because more people in the States with jobs equals more spending. They've got more money to spend, right? And then that can lead to more economic growth. That's the oversimplified narrative, but one that is a powerful narrative across global financial markets. Okay, so know that. Number two, it is also very important not just to traders and investors, but also to the Federal Reserve, aka the Fed, aka the world's most important central bank. Okay, so they have got two parts to one job. As the saying goes, they've got one job, but it's a big job where they have to balance between inflation on one hand or stable prices versus maximum employment. So that's why it's a one the jobs section or the jobs market in the US makes up one of the Fed's dual mandate. Okay? Stable prices on one hand, maximum employment on the other. Okay? So this is something that traders, investors, and even the world's most powerful central bank watches very closely. Okay, hence the big moves that we can see after this jobs report. Why? Because when the jobs report comes out, the moment it lands, we get the official data. Markets use that numbers, and I'll show you what those numbers look like in just a bit. But markets use those numbers to try and interpret what the Fed will do next. So for the next Fed rate decision due at the end of January, will they cut interest rates again? Like they've already done three times in this quarter since September until now. They've been cutting interest rates. Can they afford to cut interest rates again in January? Okay, so all those kind of expectations and forecasts will be reflected in how gold, stocks, Bitcoin, all of them move. Okay, depending on how the US jobs data actually comes out. Okay, and so that brings us to the final point there. So the idea that if you've got a strong jobs market, in other words, people who want jobs can get jobs, right? And those who want perhaps even higher wages, there's a number that comes out for average hourly earnings as well. We'll pay less attention to that. We'll be looking at the headline number, but just know that that's the kind of data that comes out, right? So if there's a strong jobs market, people who want jobs can get it, i.e., they got more money to then spend. That could then lead to rising inflation. How? Because businesses are then more confident that, hey, their customers have got jobs, their customers have got money, right? So I'm going to try and increase the prices so that I can maximize my profits and my customers can afford it. No problem, i.e., inflation, prices going up. Okay. When that happens, the Fed may have to keep interest rates high, right, to try and cool down inflation. Okay, that's the pill, so to speak, that the Fed has to try and keep inflation calm. Okay. Now, the opposite side, if we see a weak or soft jobs market, okay, that means people who want jobs cannot get jobs. And so they've got less money to spend. That means businesses are discouraged from raising their prices because, hey, my customers don't have jobs. They don't have money to spend. I can't be raising prices. Or worse, I might have to give a discount and keep prices lower sustainably. That's what's called deflation, right? It may sound good for you as a buyer, but for an economy, that is not a good sign. So, what does the Fed do? The Fed lowers interest rates to try and help businesses support them, make sure that households and businesses have got more money in their pockets so they can go out and spend or go higher and create new jobs. Okay. So, that's a very quick summary of business econs 101 lesson on why this US jobs report is so important. Okay. Cool. Let me just quickly show you. Well, how about this? Before I show you the historical context for how major asset classes have reacted to these non-farm payroll reports. First things first, look, folks, I hope that the learnings from these daily live streams can benefit you, at least help you make better informed decisions, whether you're trading or investing, right, across asset classes. But beyond that, of course, beyond the sweet learnings, we try to make it sweeter by setting aside a prize pool of 25,000 USDT in rewards. We have been giving these away, but not fast enough. And guess what? We've only got maybe a few days left before we take a hiatus for these live streams for the rest of the year. We've got Christmas next week already, right? So grab your chance now. This is for new Bybit users. Scan this QR code or click on the link in the YouTube description or in the X video post, and you can sign up there and then get your share of 25,000 USDT in rewards. Okay. Now, for if you are an existing Bybit user already, don't worry. Same thing. Scan the QR code or click on the link below, and you can still get a chance at a further 5,000 USDT in weekly rewards. And I'll show you that page right now. This is what it looks like, right? So you'll end up in this page. This is for existing users. Actually, it doesn't matter. Anybody who scans this QR code or types on the link, you'll end on this page. The Bybit OG users, you can qualify for this. New Bybit users, first things first, you got to sign up. Then you can get your share of 25,000 USDT. Then beyond that, once you go through the process, then you could eventually also be in the running for this. Okay. But how you do that is you go through these various tasks to earn points, right? There are many different tasks that you can take advantage of, even down here as well. As you complete these tasks, right, like read an article or invite your friends or deposit, then you can get points and then you can stack yourself up against these winners here. We've got so many of them who have already taken advantage of these points to get their share of 5,000 USDT in a prize pool. Okay. But if you're new, again, you can get a share of 25,000 USDT in prizes, in trading vouchers, actually, to be more specific. First things first, scan the QR code or sign up. Okay. Cool. So let me show you now how major asset classes have reacted to this very important US jobs report, which is due in about 16 minutes from now. Okay. So I'm going to show you this slide. Okay, here we go. So major asset classes like gold, S&P 500. Now, if you're not familiar, the S&P 500 is the most popular way to measure how US stock markets are performing overall. Okay, it's an index, it's a stock index. When people say index, okay, it's just a way to measure something. So, like earlier, we spoke about inflation that is widely measured by the Consumer Price Index. What does that index measure? It measures consumer prices or the changes in consumer prices, right? So the S&P 500 is a stock index. Okay, that means it measures a big group or basket of stocks, and in that group, in that basket, is 500 of the leading names in the US stock market. industry leaders. I'm talking Apple, Tesla, Nvidia, JP Morgan, Disney, Exxon, Walmart, right? All those big industry leading names, they are in that basket. And it's all measured by the S&P 500. Long story short, S&P 500 measures how the US stock market is performing overall. For those of you watching, thank you so much for bearing with my voice here. The turn in the weather here in Dubai is getting to me, but hey, I could have called in sick, but this is one that's not to be missed. I have to share with you ahead of this very important US jobs report dropping in about 15 minutes from now. Okay, now, so you can see all the previous US jobs reports that have come out so far this year, right? Look at the one that happened last time, November 20th. Now keep in mind, if you look at the dates, right, generally they are earlier in the year. Generally, the US jobs report comes out on the first Friday of every month. Generally. Now, what happened in October? Of course, we know that there was the US government shutdown. So they have actually canceled the October non farm payrolls report, the jobs report. Okay. So we're actually going to get some of it later today as well. So this is where it can get a bit confusing, but just know this. Generally, US jobs reports released on the first Friday of every month. This one is a bit special, right, which is on December 16th. And this is for the November jobs report. And it's delayed because of all the disruptions from the US government shutdown. Okay. But look at what happened at the last jobs report. Okay. This is on November 20th, they released the September data. Okay. Everything fell. Now, the reason for that is because we actually saw better than expected US jobs report. Okay. So a stronger US jobs market can lead these assets down. I repeat, a stronger US jobs market can see declines for these assets: gold, US stocks, cryptos. Okay. Why? Because these assets love the idea of US interest rates going down. They don't like it when US interest rates are staying high. Okay. Which brings us back to that slide I showed you guys earlier. Sorry, not that one. Right. So going back to this one, if I can just pull it up quickly here, folks, bear with me in 3 seconds, 2, 1. Right. Look at this one down here. Okay. A strong jobs report. Fed keeps interest rates high. That typically means gold, S&P 500, Bitcoin goes down. Okay. Those are the expectations coming up in about 12 minutes from now. Okay. So the opposite, if you want, again, this is not financial advice here, but if you want the gold, US stocks and cryptos to go up, what you need to see generally is a weaker jobs market. Okay, weaker jobs market. So that's the expectations for this very important data. I'm also going to quickly show you guys this article that I wrote and published on the Bybit website. If you are new to this, I'll show you how to get there. First things first, if your starting point is the bybit.com website, and don't worry, for you app users, I'll tell you how to get to that in just a bit, okay? But for desktop users, you go to bybit.com, you'll see Learn across the top. Then you'll see this Bybit Learn over here. Click on Bybit Learn. You'll see the URL change to learn.bybit.com. Okay. Then when you scroll down, you could go through the blog as well and click on daily bits. But if you scroll down, you click on analysis, and then you can see daily bits right here. And here's the latest one. Okay. US job report. Here's how Bitcoin, gold, stocks, and other major assets may react. Okay. Now, for those of you using the app, you can, first things first, when you open the app, go into your top left-hand corner of the screen, go to your account, click on services. Okay. And Learn is one of the services on the app. Just look for the Learn service. And then same thing, you'll basically see the same page. Scroll down till you see analysis. Click on analysis, and then scroll down till you see daily bits. Okay? Got it? All right. Now, I want to show you a couple of things from this, right? First things first. This was a recap of what's been happening earlier today. Here are the economic forecast. Okay, so these are the numbers that will guide expectations. Oh, see, I've got a point just for reading. Okay. Now, like, how can we know whether the US jobs report is better than expected or worse than expected? What's expected? First things first, 50,000. That's the headline number. Headline number for how many new jobs were added to the US labor market in November. Okay. So remember this 50,000. So, in other words, if we get a lot higher, like 100,000, like we saw in the September jobs report, right? Then I expect gold, S&P 500, cryptos to go down. Okay. So, this is the benchmark, what you measure against. Okay. Now, the other important number to look at is the unemployment rate. Okay. Which is the percent of those in America who are able and willing to work but cannot find work. The forecast is 4.5%. Okay. If so, that'll be the highest unemployment rate since the fourth quarter of 2021. Okay, 4.5%. So that could be a weak, so a higher number there, a higher jobless rate, right? Means that it's the US jobs market is weakening. Okay. If we get higher than 4.5%, then I expect, say, gold to go up, S&P 500 to go up, cryptos to go up. Okay. So this is all outlined in the potential near-term scenarios. I hope you guys can read this, right? So, of course, to be clear, there are many nuances surrounding this. I'm just giving you the oversimplified scenarios here, but hopefully you can figure all this out. I have also attached a link to this article on our X account. It's at Bybit_learn. So go check it out. Again, it's at Bybit_learn, or you can just go on the Bybit app. Again, look for learn under services and then scroll down, click on analysis, click on daily bits. This one was just published today. Okay. So here are the scenarios: weaker than expected jobs data. Either you got lower than 50K or higher than 4.5 jobless rate. Okay. Then you could maybe see some declines in risk assets initially before, maybe rebounding if markets can grow accustomed to the idea of, hey, the Fed might actually have to cut interest rates in January. Okay, right now as you speak, markets only predict a 6% chance, or actually just before this live stream, it was about 24% chance that the Fed can cut in January. Okay, remember, just know this: weaker jobs market, greater chance Fed has to lower interest rates. That typically sends Bitcoin, US stocks, and gold higher. And the opposite is true. Stronger jobs market, Fed may not be in a rush to cut interest rates, then they could see immediate declines for gold, US stock indices, and cryptos. Okay, so make sure you check that all out. Hopefully, you could read some of this on the screen. Okay, now I've also included now. Once we've kind of established, again, the oversimplified scenarios, right? Well, how much up or down? Here are some forecasts, all available there, covering Bitcoin, Ethereum, Ripple, right? Solana, either up or down. Gold, silver, right? Oil, your major currency pairs that which you love. I picked the biggest three: euro dollar, pound dollar, USD JPY. Or if you like stock indices, S&P 500 or the NASDAQ. Just know this jobs report can impact everything, pretty much every corner of the global financial market, even bond markets, FX, commodities, metals, cryptos, stocks, etc. Okay. So it all begins in about 6 minutes from now. Yeah. So make sure you check out that article, quickly glance through it, and then I'll use this next 6 minutes to reset my charts. I'm going to go down to the 1 minute time frame now for Bitcoin, and really got to readjust everything here, folks. It's really going to mess up my charts, but hey, it's worth it. It's worth it. We want to see how important this US jobs report is right now. Bitcoin climbing back above 87K. We're going to get a few more of these. This is Bitcoin 1 minute time frame. Okay. And you can hear all the charting tools that we have. Very easy to use within the Bybit universe. This is, of course, the web trading platform. This is the 1 minute chart for Bitcoin, right? Still rising. And we'll quickly toggle through them. This is the S&P 500. Yeah, trying to rise as well, keeping its head above this level here, 68.25. I'm going to zoom in down to the 1 minute time frame. Again, this is on the left hand side. Yeah. Let me just make sure I've got the Bloomberg terminal open as well. Yeah, it looks like markets are getting maybe a bit uh excited ahead of the US jobs data. But again, we got to wait for the official data in 5 minutes from now. This is the SP 500 1 minute time frame. We'll zoom out a little bit so you can hopefully see the live reactions. Bitcoin, yep, looks pretty good. This is S&P 500. Let's look at gold. I think those three will be good enough. And of course, we'll kind of toggle through different assets. Hey, give me a shout here, folks. If you guys want to see a specific chart or a specific time frame, let me know. But right now, I'm redrawing these charts. XAU USDT. We call it XAU USDT plus 1 minute time frame. This is for gold. All right, cool. That's yeah, yeah, by all means, we are waiting, we're counting down 4 minutes till the US jobs report, and I'll read out the numbers as and when it lands on my Bloomberg terminal. But if you have a question or a comment or a specific chart that you want to see on a specific time frame, do let me know. I have my YouTube chat open here, trying to see, we got more people joining now, and I really hope you're not watching this after it's ended, right? Because hey, once the US job report has landed in 3 minutes from now, the markets have moved already. Now, of course, markets could well move between, of course, it's constantly moving, right? But that big jump that many traders love to see, that could have be done over in literally minutes after the US jobs report comes out. So gold right now trying to find its place around 4,300, holding around that. This is again the 1 minute chart. It's going to be really tight. We're looking at S&P 500. Oh, I've got to keep resetting all these time frames here. Let me see. Zoom out a little bit. Hopefully that's better. Yeah, hopefully that's better. S&P 500, gold. Yeah, yeah. I think maybe that's better. We'll see if there are any big moves. Okay, counting down like less than 2 minutes away from the U.S. jobs report. Bitcoin holding above the 87,000 level. Again, these are all the 1 minute time frames. Yeah. We can look at euro dollar. Euro dollar has climbed to a fresh 2 month high or highest level since October. This is the daily time frame. If I zoom out here real quick, right, highest level since early October, but we're less concerned about that. Tell you what, let's do 1 minute chart also on euro dollar. Okay, I see the like. Thank you, thank you. But hopefully, again, you're using this to your advantage. Again, none of this is trading advice. Okay, none of this is investment advice. None of this is financial advice. Please do your own research. But we are counting down to this very important U.S. jobs report, and we'll see how markets react in about 35 seconds from now. Okay, we're seeing some early moves, but still very much range bound. That's Bitcoin. This is S&P 500, 1 minute. Yeah, 1 minute time frame. We just got to make sure everything's in order. Yeah. Okay. This is gold. 1 minute time frame climbing there. Still about around the 4,300 level. This is gold. It's going to drop any second now here, folks. Let's Okay, I'm seeing numbers populate here. Okay, slightly better than expected. The headline non-farm payrolls is 64,000. 64,000. Remember, market expectations was about 50,000, so slightly better than expected. But you've got the unemployment rate. How about this? 4.6%, right? 4.6%. That is the highest level since 2021 at least. Okay, so 4-year high. That means you've maybe got a sweet spot, maybe, that okay, you've still got US new jobs being created, but you've got the unemployment rate that is ticking higher as well. So you see, early spike there for Bitcoin before reversing. They're trying to digest, okay, really the state of the US economy. So headline numbers I'm reading out to you: 64,000 new jobs added in the US economy in November, whereas unemployment rate is higher at 4.6%. I'll keep this Bitcoin chart here on the screen so that you guys can keep monitoring this while I pull up some text so that I have to keep repeating the breaking news here, folks. Let me see if I can do this. Just bear with me. So you got banners. Okay, 64 NFP. Um, Jobless rate at 4.6%. Okay, cool. Let's try and show this here. There we go. Okay, cool. So that's the breaking numbers, right? 64,000. Yep. And unemployment 4.6%. Okay, cool. So you are, yeah, seeing this big spike for Bitcoin right before adjusting lower, now climbing again. Let's do a quick check-in on the S&P 500, right? Boom, right? So you've almost got this the idea that, hey, maybe the Fed has to really intervene. Why? Because of that unemployment rate of 4.6%. Where did my banner go? Here, all right, 4.6% jobless rate for the US economy in November. That's the highest since 2021. So it looks like the Fed may have to cut interest rates in January again. I'm trying to give you some live numbers here. Right now, the market odds for a January Fed rate cut went from about 24, 26% earlier this morning now to about, well, in my yeah, lots happening in the markets right now. Well, little change right now. Maybe they still need a bit more time to really adjust to this non-farm payrolls report that just got released. But still, you've got this big spike in the S&P 500, right? Perhaps markets liking the idea that, hey, the Fed has to come and save the U.S. jobs market. Why? Because unemployment has reached its highest level. Highest level since 2021. Let me just check some of the news flow here. Um, okay. And adding to the idea that not just the unemployment rate in November was higher than expected, the October jobs report that was, remember, kind of canceled, but then they're just going to release like, just a couple of lines. Excuse me. Um, that number appears to have disappointed markets as well. So we'll kind of oh, okay. The In October, looks like the US economy actually lost 105,000 jobs. So remember, October lost 105,000 jobs. Here, I'll do this for you. Breaking October NFP minus 105K versus November NFP plus 64K. Okay. Um, this are the numbers we're looking at. So, the 64K added in November, right? Not enough to perhaps offset that October declines of 105,000 jobs lost, negative 105,000. Add to that, you've got an unemployment rate that ticked up higher to um, 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 4.6%, right? That we showed earlier. So, yeah, it looks like the Fed had to step in and save it. So much for that hawkish number there. You see gold also punching up higher, right? A little bit, but then trying to pull back here. But I mean, to be clear, right? If I zoom back out to the 1-day chart, it doesn't really register much, right? So this is literally the 1-day chart, not moving much there. Okay, but for really short-term traders, you can see that big move, and of course, please exercise proper risk management. Right, so big move here in the minutes after the U.S. non-farm payrolls was released. So a bit of a mixed bag here. I'm trying to see what else is coming out on my Bloomberg terminal. Trying to multitask here, folks. Um, Yeah, even hourly earnings as well, coming in lower than expected. So, in other words, the risk to inflation may not be as severe. To be clear, this is only just one jobs report. It's an important one, and it comes out every month. We'll have another one due in January for the December data, right? After December is over, they release it in January, all ahead of the Fed meeting and Fed rate decision slated for January 28th. Okay. So that's gold for you, spiking higher before coming back down. This is the 1 minute time frame. But again, like I showed you on the 1 day chart, this is the 1 day chart, right? Not moving much there, just a doji candlestick of sorts. Looking at S&P 500, similarly, big spike when the data was released and some pullback. I know during our December 9th live stream before the Fed rate decision, one of you actually asked the question, well, what kind of time frame works best, right, for trading around these big macro events? So the short answer is depends on your risk appetite, right? So you can basically cut it down to three phases. One, you get in before, well before the data is released, so that if you predict the correct way, right, you can catch potentially this big move to the upside. Again, none of this is financial advice, yeah, but this is a common strategy. But then more importantly, you got to know when to get out, right? So you have to be okay with your, not just your risk appetite, but okay with knowing that, okay, before you enter the trade, your expectations for profits before getting out, because otherwise you can see, right, then it pull back, right? So phase one can be you get in early before the event happens, right? And hopefully it goes your way. Phase two is, if you want to avoid this uncertainty, then phase two is you wait for the pullback. Very often, after a big outsized move, no matter on a 1 minute time frame or the 1 day time frame, right? There's generally a slight correction, right? And that's another potential opportunity there. Otherwise, if you are more of a longer term person, right, based on this one data alone, and of course it's never that simple, but based on this one data alone, it looks promising for the S&P 500, Bitcoin, and maybe even gold. More so for gold and S&P 500. Bitcoin and cryptos, they still have got their own problems to deal with, and we'll talk about that another time. But it bodes well for these assets like gold and U.S. stocks going into the year end. Okay, um, so that's a quick look on S&P 500. Going back to Bitcoin there, right? See, initial spike, all of it came back down. Okay, because yeah, it's pretty much a mixed bag. But going out to the 1 day time frame for Bitcoin, ooh, this was sorry, I had to do a lot of adjusting there. Bitcoin, yeah, on a 1 day time frame candlestick, yeah, not really much there, right? So still, I mean, although it's dipping below 87,000 right now, but in the grand scheme of things, again, this is the 1 day time frame, barely registers. Okay, now of course, then that means you need more time to let everything play out, right? Now speaking about more time, guess what? It's not over because we still have the very important US inflation data due out on Thursday. So we're going to start these live streams earlier as well at 1 p.m. GMT on Thursday. Normally, these live streams begin at 2 p.m. GMT, half an hour before US markets open. But for today and also on Thursday, December 18th, we're going to start it half an hour before the economic data release. US inflation data, very important as well. That's set to come out on Thursday, December 18th at 1:30 p.m. GMT. So we will start this live stream on Thursday at 1 p.m. GMT, half an hour before. Okay. So yeah, Bitcoin, okay, not much fireworks there. Maybe still needing some time to digest. Even looking at Fed funds futures, which is a contract that markets use to kind of interpret what they expect the Fed to do next time. Well, actually, they've dialed it back down, oddly enough. They've gone from 24% chance of a Fed rate cut in January down to only just 22%. We'll see if that gets adjusted over the course of the coming hours and days and weeks ahead, all the way leading up to the January 28th decision by the Fed about what to do with US interest rates. Bitcoin, big spike up, pullback, right? Then now trying to recover some of those gains. We'll see if it lasts. Now back above that 87,000 mark on the 1 minute time frame. Um, yeah, S&P 500 basically erased all of its initial gains before trying to go back higher. So like I said, right, there's generally that pullback as well. Entry and exit, that is super key with these shorter 1 minute time frames. There's obviously a greater risk. That's why the answer to the question about, well, which time frame should I use to trade? It all depends on your risk appetite. Okay, if you have a lower risk appetite, you might want to look at the longer time frames and make sure that you exercise proper risk management with how much you allocate for each trade, the lot size, etc. Well, actually, Fed funds futures, how about this, have actually gone to something more that I'm expecting, now rising to about 29% chance of a Fed rate cut in January. So it looks like markets still need more evidence about to be convinced that the Fed can cut interest rates in January. So it's gone from about 24, 26% earlier this morning to about 29% right now, live data as we speak. I'm going to try and wrap things up here a little bit. So, just to show you again, non-farm payrolls can trigger big moves across asset classes. That was S&P 500 earlier. Gold, right, hanging on to its gains, right, pretty good for those of you who expected it to go up. Bitcoin trying to recover back to where it was when the non-farm payrolls data was just released. I'm going to scan my Bloomberg terminal to make sure I don't miss any headlines here, folks. Just bear with me. Any questions, drop them up in the live chat, be it on YouTube or X. I'm sorry, it's a bit harder for me to check it out because I got too many tabs open. Just bear with me, folks. Okay, you've got US retail sales. I wish I could show you this, but I can't show you my Bloomberg terminal because of copyright reasons, folks. Sorry, but US retail sales also, stagnating. So it looks like, the US jobs market, so the US economy could be slowing down on a couple of fronts. The jobs market and also retail sales are stagnating. Let's see if there's a bit more nuance to any of this. So there's some news here about, well, guess what? All the job cuts that Doge, or the Department of Government Efficiency, helmed by Elon Musk earlier this year, those are starting to show up in the non-farm payrolls data. So that's quite interesting there. I think we'll leave it at that. I don't see any questions or comments on YouTube or X, but that's Bitcoin prices on the screen there, fluctuating. Similarly, S&P 500, big spike, erased all of it very quickly, literally within minutes. This is the 1 minute time frame before trying to climb back higher. In gold prices, at least, well, holding on to some of its gains, although it's paired a bit of it. But, as things stand, depending, of course, on how the inflation data comes out on Thursday, if we got further weakness in the US jobs market, not just today, but know that we've got the December US jobs report that will come out in January, right, before the next Fed meeting, unless there's another US government shutdown or something. But all these data will be used to interpret what the Fed might do next at its decision due on January 28th, 2026. All right, cool. So we'll leave it at that. Thank you so much for joining. And if you got any questions, feel free to drop them in the chat or on X. If you're watching this after the live stream, kudos to you. You get brownie points. But if nothing else, don't forget, we still have this giveaway for you. We've only got a few more days left for this special prize giveaway. I've set aside 25,000 USDT in rewards for new Bybit users. Scan this QR code that you see on the screen or click on the link in the YouTube description. Make sure you subscribe to our YouTube channel as well. Search for Bybit Learn Official. That's our YouTube channel name. And you can find the link in the description for each of these daily live streams. Just click on the live tab in our channel, okay? So again, search for Bybit Learn Official. Click on the live tab in our channel and you can see the link to sign up there. or you can scan this QR code. Those of you on X, you can find the link on our X page as well. And of course, our X handle is at Bybit_learn. All right, 45 minutes. I think that's a good time to wrap up. Thank you so much for joining me. And don't forget, we'll see you again 1 p.m. GMT time on Thursday, December 18th, because we've got another big one. The US inflation data